Okay, so let's have a look at the balance sheet then. So once again, it's balance sheet for E. Kelly as at. So you've got your fixed assets, your costs, your cumulative depreciation, and your net book value. So the premises, as per the question, 174,000. You're going to add on the premises that we bought. So we bought a premises for 60,000. So that's going to give us 234,000. Equipment, then we bought equipment, bank payment, 30,000. And your van, then we also bought a van, 32,000. So you're going to add them up, 296,000. We don't have any depreciation, so your net book value then is 296,000. Goodwill then that we calculated as part of step 1, 20,670. So you go back here with the statement of capital, 20,670. We don't have any financial income in our financial investments here, so we don't have to include them. So you go straight into your current assets. So your clothing stock, as we calculated previously with our light and heat, it's going to be 15,000. Your debtors, 16,600. Your cash, 550. Your bank, that we calculated as part of our steps. So step number 3, 10,100. Insurance, that we did as part of step number 7, which is any gains or expenses, 700. That's prepaid, 750. And then your rent, so we calculate there as well. Current asset, 6,650. So you're going to add them up. You're going to get 50,150. Your next heading is going to be your creditors due, so falling in 1 year. So your creditors, 13,300. Your interest then that we need to pay, $1,200. You got your loan repayment of 12,000, so your 2 6-month or 6,000 that need to be paid, and then your electricity due then here. Remember to include your loan repayment. It's a little bit different from the 2015 question. Add the 4 of them up, you get 28,140. Take it away from 50,150, you get 20,010. It's going to be added on to your fixed assets, which is 338,680. Your finance by then, so the loan that you have to repay after 1 year, it's going to be 60,000. We introduced our dividends of 3,600. Capital then to purchase the buildings, 205. Your net profit then from the previous question, 89,945. And then your drawings from our last working, where we just took all our drawings, we got 19,865. You're going to take that away from the 209,854. And that gives you 278,680. Added on to your 600. And your finance by section, 338,680. So the 2 balance. Okay, the last part then, bit of theory. Once again, taken straight from the marking scheme for 2013. What additional information would be available if Kelly's accounts were prepared using the double entry system? So these are all the figures that you get if you use a double entry. So you'll be able to calculate your total sales figures, your total purchases figure. You'll be able to produce a trial balance, the bank balance, the capital drawing, goodwill, any bad debts, expenses due, prepaids, any general nominal ledger accounts, so there'll be your T accounts that used to be balanced off to calculate your trial balance. So books of first entry. From there then to go into your ledger accounts, your general ledger, nominal ledger, creditors ledger, debtors ledger, and from them then they're balanced off to help you produce a trial balance. but you'll be able to have exact figures, so you won't be using any estimates. You won't be using bits and pieces to produce your profit and loss account and your balance sheet, so you won't have any incomplete records.